Insurance is a crucial aspect of our lives, providing financial protection and peace of mind in case of unexpected events. Whether you're a second policyholder or a first time buyer, it's important to have a comprehensive understanding of the insurance industry to make informed decisions about your coverage. First, let's discuss the different types of insurance available. While there are many types of insurance, some of them are the most common ones. Life insurance, which provides financial support for your loved ones in case of your ultimate untimely death. Health insurance, which covers medical expenses in case of an illness or injury. Auto insurance, which covers damage to your vehicles and liabilities in your if you're in an accident. And finally, home insurance, which covers damage to your homes and belongings. It's important to understand that each of these types of insurance has different coverage options and costs. Therefore, it's crucial to understand what each policy covers and choose the ones that fits best for you. Now let's talk as to what determines the cost of insurance. The cost of insurance, also known as the premium, is calculated based on several factors. Some of these factors include your age, health, occupation, driving record, credit scores, and the type of coverage you choose. Insurance companies assess the risk associated with different coverages to a particular person or entity. The higher the risk, the higher the premium. For example, if you have a history of accidents or a poor credit score, you may be considered a high risk and therefore charged a higher premium. It's essential to personal loans, which are typically used for small expenses such as home repairs or medical bills. Auto loans, which are used to finance the purchase of a vehicle. Home loans, which are used to purchase a home. And business loans, which are used to start, expand, and create more businesses. While taking out a loan, it's important to shop around and compare different options available to help find the best in your interest and terms for your needs. While applying for a loan, you'll be asked to provide information about your income, credit history, and other financial details. The information will be used by the lender to determine your eligibility and the terms of the loans. The terms of a loan are determined by several factors, including your credit score, income, and the amount of loan. A high credit score typically results in better interest rates in long term, while a lower credit score may result in higher interest and stricter terms. It's important to understand the terms of your loan, including the interest rates, repayment period, and any fees associated with the loan. This may help you plan your finances and avoid any surprises down the road. In addition, it's important to make your loan payments on time to avoid late fees and potential damage to your credit score. If you're having trouble making your payments, contact your lender to discuss alternative payment options. Finally, when you've paid off your loan, make sure to obtain a release of lien or other documentation that provides the loan that has been satisfied. This will help you protect your credit score and ensure that you're not liable for any future further payments. In conclusion, loans are a useful financial tool for achieving goals, but it's important to understand that different types of loan available. Shop around for the best terms and make your payment on time. By taking these steps, you can use loans to improve your financial situation and achieve your goals. While loan can be a valuable resource for funding major expenses, they also come with risks. One of the biggest risks is the possibility of defaulting on the loan. Defaulting on a loan can result in damage of credit score, which can make it difficult to obtain credit in the future. It also can result in legal action by the lender to recover the loan owned. To avoid defaulting on a loan, it's important to plan your finances carefully